So next one is about understanding the continuation and the reversal patterns. Pretty much are the same, but in a big picture, we see that the reversal pattern can happen in the weekly, daily, or 4-hour charts. That's the most common because are the biggest one that goes down and goes up. And the second option is the continuation pattern, which is in the smaller time frames, which can be in the 5 minutes up to 1 hour. And what we can see, for example, is that the continuation pattern will be something like this. It's going up, then it retraces, gets on the demand zone, for example, and continues up. In this case, on the weekly or the daily chart, it goes much slower. I mean, it can take 10 days, 2 weeks to complete, for example, this V shape and start going up. Inside of this V shape here, you can find lots of continuation patterns here. The same applies here, okay? So always you can get the continuation patterns on the smaller ones inside the bigger ones. One thing that I would like to tell you is the following, which I think is crucial to understand. This is, I would say, a paid version information, but I'm going to give it for free because I think it's important. Look, when we have one candle, whether it's up or down, let's say this candle closed up, the next candle, the next day, when it opens, what happens? Happens the following, right? It gets a retracement down, then after it starts moving up. Why? Because the pressure of this candle is much more effective, bigger than the smaller ones. Therefore, as soon as we have a big candle closing, if it's closing up, then what is happening in terms of smaller time frame will be something like this. So let me just clean up so you can see what I mean. I'm gonna provide it in another way. So a big candle here and second candle here. And what I'm gonna do is the following. Look, so we have this candle right here, and bam, boom, we got a demand level here inside the daily chart. Then when the day changes, we get a new chart, and the new chart basically, normally we get a retracement, then after it's a continuation. Therefore, what we're gonna see is something like this. So it's gonna go and test the demand zone of the daily chart and the daily candle. As we closed green, in this case, we have the pressure of the last day. We have a huge potential here that this is gonna go up, but not just here, but all the way up here, maybe here, doesn't matter. But you know that at least you are making 1 to 3, 1 to 4 profit. Meaning that if you are risking here $100, you can be making easily $400 or $500, depending on how patient you can be. The same can apply if you are putting $1,000. It's just about zeros. The more zeros you put, the more zeros you get. This is a premium, let's say, advice, and it's super important because in our paid class, in our school community, we are talking every day about this. We have a plugin as well that shows us whether the last candle closed up or down in the smaller time frames. Therefore, we don't need really go to the bigger time frame to see if was the candle down, was the candle up, what was the candle. We don't need that because already we have the plugin. So always consider that. The reversal patterns happens in the weekly, daily, 4-hour charts. The continuation patterns happens on the 1 hour, 30 minutes, 15 minutes, or 5 minutes chart. I hope that was interesting for you, because in the next one it's gonna be even more interesting. Thanks a lot. See you in the next one.